Okay, so here's probably what's going to be my worst trade of last week on Wednesday. Long Apple right up through here. If you look at the D1 over here in TC2000, I have the long here at this line, and you can see what happened. Literally, I got faked out completely on this thing. All right, so here's why I thought Apple was a good trade. It was Wednesday on SPY, and we just had, coming out of Tuesday, a massive gap down. It was an FOMC day, so not much was happening. And then we get this nice rally after the algos decide what direction to go post FOMC. So we're looking at literally this candle, and none of this is visible. So I've got that situation happening after a rally. Okay, so I'm looking at Apple, and my reasoning for entering Apple is not necessarily because of its relative strength, because you can tell it doesn't really have anything. There's not much going on. Apple is such a large percentage of the overall market because it's a huge percent of tech, and tech is a huge percent of the market, that oftentimes Apple sometimes kind of leads the market. So that was my thinking. On top of that, this D1 looks pretty nice. If you look at how aggressively consistent this trend is all the way up, it's stronger overall than the rally. I'm looking at this through here, and I see that it's also stronger than its sector as well, even though it's kind of the same strength. But then what I also like too was this above average candle here. You can see down through there, this above average candle of volume, so it had good relative volume as well. And then lastly, if you zoom out, look at that. There's a line through there all the way down, and it had just peaked over it. Literally just tiny little peak over. Okay, so that's my reasoning for entering Apple. The other thing I saw was that Apple didn't gap down on Wednesday, and the market did gap down. So I'm thinking, cool, this one's a no-brainer, it's easy. And I actually saw a couple pros take this trade too, so I'm like, awesome, I'm gonna win this thing. But it immediately ripped against me. So it immediately popped against me, and the reason why it did was because of the market. If you look at the market right through here, we get this big FOMC rally, but the volume for an FOM, like post-FOMC minutes, is not that much. It's pretty lackluster. And then you take a look at the very top of the gap fill right there. That's any excuse to get immediately slammed back down. So I was not looking at that gap fill as a resistance point. I was thinking we're going all the way back up to the 200 SMA right back up there. So that was my first mistake. I wasn't paying attention to where these lines of resistance could be or the context of this FOMC rally. And Apple went immediately against me. So I'm thinking, okay, cool. No big deal. This thing is still strong. It's Apple. You can hold Apple forever. But the amount of buying power that I put into this thing, I should not have held it as long as I did. And I'm still holding it right now, which is probably a bad idea. So the next day, it kind of fought around and floundered a little bit, but it was still kind of strong. It was still a little bit stronger. If you look at this next D1 candle to Apple, and then you look at this D1 candle on SPY, this is more bearish than Apple. So I'm like, okay, no big deal. And to be honest, Apple hadn't broken its upsloping trend line. Here's the second mistake. Not only did I not see that resistance point on the FOMC, I also held here. I didn't wait for confirmation. And then on top of that, look at how far you got to zoom out on this D1 to get these lines. If you're zooming out this far and you're trying to get the exact trend line, and there's a whole bunch of little algos on the way up inside this giant massive rally, you're probably going to get your lines off by a little bit. By the time this line gets from here all the way up to here, or from here all the way down to there, you're probably going to be off. And you could be off by like 50 cents on the damn stock just because of the distance. I try to avoid trades where the lines that it's breaking are so incredibly long that your chance of getting them off, the tail end of them, is very high. So I try to avoid that. But once again, hey, Apple's Apple. A couple pros took them, right? So I'm still holding Apple as we speak, and I'm probably going to be taking a bigger loss on this next Monday morning. I'm pretty confident about the rest of my trades, but this is my worst trade. As you can see, it's just continuing to decline all the way down, and you can see it actually broke this algo line as well. The correct exit should have been on the loss of this trend line right through here. So literally Thursday after hours, I should have exited Apple, which is plenty liquid after hours for me to do that. But mistakes after mistakes, hindsight's 20/20. That was my worst trade of the week. It's gonna take a hit on me. I'm still gonna be green on the week, still gonna be profitable, but there you have it.